Good afternoon and welcome to Stock Market Today, everyone. On today's show, we're going to be taking a look at Shopify, Adobe, as well as Chipotle. But first, let's take a look at the major indexes. It's Alyssa Corum here with Ed Carson, and it was a pretty bad day in the market. The NASDAQ finished down about 1.5%. The S&P 500 down 0.9%. The Dow down 0.6%. And some comments by the Fed may have had something to do with this.
Yeah, I mean, the markets were already down somewhat, but then there was a real big drop around 1 o'clock Eastern. Fed Chief Powell said, hey, we're not going to let politics influence policy, suggesting that maybe the Fed won't want to be seen as doing what Trump has said, because Trump has been a constant critic of the Fed. And meanwhile, a dovish policymaker, St. Louis Fed President James Bullard, said he's not interested in a 50 basis point cut. He wants a 25 basis point cut. Some people have been expecting maybe we could get a big cut next month. So those things really did not help.
Yeah, and with this heavy selling today, we now have the NASDAQ below its 10-day line. That is the green line on the chart. So pretty much the first day that we have seen that since this new rally.
Yeah, and it's approaching the 50-day line. It's not great action. The thing is, the indexes look better than the growth stocks. I mean, the growth stocks are really hammered up. We're going to take a look at some of them, soon. But a key point is that if you want to know how the market is doing, you look at the major averages, but you also look at the leading stocks.
Yes.
But even if you don't care about how the leading stocks, about how the market is, if you are acting appropriately with your stocks, these breakouts are failing.
Right.
Or big gains are coming down. So you would probably be wanting to take profits or getting out or cutting losses, even if you have no idea what is going on with the market.
Right. There's a reason why we use sell rules and we follow the market. But let's take a look at Shopify. It's been a leading name on a big run. At one point, I think it was up over 80% from a breakout. But today's loss knocked shares off another 9% on a 3-day losing streak. Heavy volume here. But, this is a name that had become very well extended from its 50-day line.
Yeah, I mean, and it's still well above the 50-day line.
It is.
I mean, this has been a great stock, and maybe it'll be fine, but this is, even some of the stocks that seemed impervious to the selling, because really it had a little few minor corrections, but never really sold off. This is the first time it's sort of gone through some of its, the 10 and 21-day line really threw that hard. And again, maybe this is just a pause and it'll correct or it'll set up a new base. But it's just a sign that even the great stocks are coming under pressure, and really in those top stocks.
Right, and depending on your time horizon with this investment, if you had gotten in on that last breakout, maybe you were buying on those pullbacks. I mean, today's loss, it's still above the 50-day, but this is the biggest one-day loss in heavy volume in quite a while for this stock.
Yeah, it's obviously this is the leader's leader kind of thing among those stocks, and that they took a hard hit today.
All right, well, Adobe also closed down today about 4% after a recent breakout on earnings. So it's now back below the buy point here with a 4% loss in heavy turnover. And this is a name among the software group. It wasn't one of those, rocket ship growers, but it just had a breakout and now back below that level.
Yeah, I mean, basically recent breakouts are failing. I mean, Lululemon coming through the buy point, Rapid7 coming through the buy point, Match Group coming through the buy, had gone way up above the 50-day line. So, I mean, it's just that situation. Again, you may not be paying attention to the market, but the market pays attention to the top stocks. And if the market is down, top stocks are going to come down, and software was just hit really hard.
Yeah, always important, as you're saying, Ed, to take a look at what the top stocks are doing. Speaking of a top stock that is holding up, though, we have Chipotle shares rising about 1.3% today, holding in a nice tight range here near highs.
Yeah, I mean, Chipotle has sort of a messy pattern, but it looks a lot better than some of the basic stocks up today. I mean, it actually rose. It's sort of like there's that little short consolidation the last several days. It's sort of like a handle. We're calling that the buy point. I mean, the stock has sort of had these halting action. It's consolidated. But if you look at that blue line, the relative strength line looks really strong.
Yeah, the relative strength line measuring price performance versus the S&P 500, and you always want to be focusing on stocks that are outperforming the market. Our research shows that stocks that have that RS line that's trending higher and hitting a short-term high, if not a new all-time high, when they break out. That is a very bullish signal here. So we'll have to keep an eye on Chipotle as it continues to work on this a little bit of a weird pattern here. And it was the stock of the day.
Yeah, it was stock of the day in part because of its strong action, but it's also, its earnings growth has been really strong. I think the last few quarters were 62, 28, and 60%, 4 quarters of accelerating sales growth. So it's really got strong fundamentals, pretty strong technicals.
So, if we get some good headlines later this week, maybe we could see a breakout here for Chipotle.
That may be.
Potentially. We'll have to keep it on the watch list. All right, everyone. Thanks so much for tuning in today. And of course, you can always check out all of our content at investors.com and across social media, whether that's on Facebook, Instagram, YouTube, or Twitter. So follow and subscribe to stay up to date on all the latest. Thanks for watching, everyone, and we'll see you right back here tomorrow.